Welcome back, guys, to the second episode of the Trading Mastery series. Today, we are going to talk about what IPDA is and what it's made up of. So, like you know, the market is controlled by IPDA, which stands for Interbank Price Deliery Algorithm. IPDA is like the machine that manages currency prices. So it compares them to the US dollar index, which is the currency that influences all the others. So, like in the financial world, IPDA work with two main conditions, with the risk on condition and the risk off condition. Risk on, this happens when there are good global conditions for investing, like peace or stability. In this situation, the dollar index goes down. In the risk off, this happens when there are problems in the world, especially political or geopolitical ones, and in this case, the dollar index goes up. The IPDA also help us to understand and to defining the bias. The bias is like the draw to liquidity. So, uh, take an example in a bullish bias. We say there is a bullish bias when we see bullish price movements that create new highs, leave fair value gap. That is a concept that we talk about it in the future episode of the Trading Master series. And this is the general definition of what is a bias. Now that we understand what is IPDA and in which condition can work IPDA, IPDA also work for two reasons. The first reason is to grab liquidity, that this means moving past hold hikes or lows. And the second one is to rebalance an FVG, that means to correct a past move that left an imbalance. So this is all that you need to know about the technical of the IPDA. But now we can take a look into the four market conditions of IPDA. IPDA operates in four possible phases. The first one is called consolidation. This phase is when IPDA keeps price trapped between two key levels. The main reference point is the equilibrium. Equilibrium is the 50% level of the consolidation range. To trace this 50% level, you can use the Fibonacci instruments. And from here, the first directional move usually start. So the second phase is called expansion. This is the first directional move that we talk into consolidation phase. And expansion is a strong directional move, usually a few candles moving in the same bias, and the price moves quickly away from the equilibrium level. And the order block is usually responsible for this move. So you can see the image that the order block is a pattern formed by 1 to 3 candles moving in the opposite direction of the expansion phase. And these candles are followed by an aggressive or engulfing candle with the same direction of the expansion. But we talk about order block in the future episode. So when price moves from the 50% level, which means from the equilibrium, it is the smart money showing their intention. The third phase is it's called retracement. Retracement is a temporary move into the opposite direction of the last expansion, and price here often returns into a previous range to fill or react to an fair value gap. Fair value gap is an imbalance. You can see here the screen of this pattern. Fair value gap is formed by 3 candles with especially with the same bias, and we need to take the lower wick of the first candle and the high wick of the third candle. Here is the imbalance of this movement. This is also called internal liquidity. The last phase is called reversal. Reversal is a strong move that goes against the previous expansions. So it's have the job to breaking the expansion move. So invalidates the current bias and start a possible counter trend. Reversal happen when price statistically reach important liquidity levels that have been in place for a long time. So the main reference point here are hold hikes or low. But important notes that IPDA never goes directly from expansion to reversal without a consolidation phase, unless there is a major news event. IPDA open at 4 a.m. market time in New York time, so it's crucial to mark this time on your chart. So guys, that's it for today's. I hope you know a clear understanding of what IPDA is and its components. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you don't miss the next episode of the Trading Mastery series. See you next time and be safe.